Welcome everyone to Vested Interest. This is Shane, and I am back. I know I've been gone for a few days. I did miss some time this week in the Stock Pick of the Day series. I did do some hunting back home. This video will come out late Sunday night. Trying to get back into the swing of things. On this video, we will cover the weekly portfolio update. I try to do this every Sunday. We did add $1,972 into the portfolio, so we will go over what those funds purchased. We will also cover any dividends that were paid out and any options that we were in. I do try to run weekly options, whether that's selling covered calls or selling cash secured puts. Sell covered calls on positions I own and sell cash secured puts on positions I'd like to buy. And if you are new to the channel, for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into stocks in the portfolio on a weekly basis. I also do larger purchases whenever I get a bonus. Typically, I get a bonus in the spring around March, April timeframe. I'll dump that in the market. And if I do any side work, I dump that in the market as well. I do cover all my investments on this channel out in the open. I cover my portfolio weekly. It is free to see what I am doing. No paid Patreon account, no other sites I'm trying to send you to, no links I'm sending you to either. But if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. And if you'd like to donate and buy me a cup of coffee, there's a button down below you can click as well to do that. Really appreciate everyone out there who's taking the time to do that, and a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And again, hit that subscribe button if you haven't done. Join us on this journey to financial freedom. Join the Vested Interest community. Click subscribe. It's free to do. All right, and into the first activity out of the portfolio here, November 11th, we did have one options play hit, BABA again, which has pretty consistently been the one that we've been running. Now, we've thrown out J&J. I tried to throw out Pfizer, I think, this week on a few contracts, even threw out CVS. Some big pullbacks in those names, so I thought I might try to take advantage, but none of them hit. BABA did. So we did have a sold to open. So we have 100 shares. That's what the -1 represents. That's one contract. One contract is 100 shares of BABA, ticker BABA. This is a Chinese company. So for those of you out there who don't buy into stocks outside the United States, maybe this is one you want to avoid, but I have a position here. I'm comfortable holding it. No big deal. And we opened this on the 11th, right, Monday, with a expiration date of November 15th with a strike price of $107. Basically, that meant if it was $107 or over, these position would be called away. I would keep the premium over here regardless, but it wasn't. It did expire worthless, but let's go through the rest of this. $107 strike price. We received 34 cents per share after fees, amounts to $33.45. That's the options you see up here. So we keep that regardless of what happens. As I said, it did expire worthless. So on the 15th, it was under 107. So we keep those 100 shares. We can do it again probably next week, and we keep the $33.45. And this one really dropped down into the 80s again. So I've been running this for a week, I think, or a few weeks here, at least a month, if not more. And I think I started selling them whenever it really ran up to around the 117, then 110, this one 107. Now it's all the way back down to 88. So I rode that drop down and collected the options premium. Now it'll be harder to do that on the way back up, but that's the idea. Whenever I see a stock that's kind of at the top of its range, I like to throw out some covered calls, or if maybe one has had a recent pullback where I think it might bounce back up, then I throw out some covered calls on that, and that's how I play these call options. All right, and we did receive quite a bit in dividends. We will start out. We received our first dividend on the 14th from Enterprise Product Partners, ticker EPD. And we do have the drip set. So anytime a company in the portfolio pays out dividends, and my portfolio is all or nothing. Let me know if you have a portfolio out there where you can set the drip dividend reinvestment plan on individual positions, or is it all of your positions in your portfolio or none? Let me know how your portfolio manager does mine. Mine's through Ally Bank. I'd like to know if there's one out there or some out there that do let you set the drip on individual positions, the dividend reinvestment plan, instead of on the entire portfolio. I wouldn't mind doing that, but mine does not. So anyways, we received $150.87. That's represented up here in the dividends paid out on the 14th. And since we have the drip set, that $150.87 went right back in and picked up more shares of EPD, 4.9193 shares. This 4.9193 shares added an additional $10.33 in passive income over the next calendar year. So when you hear people say the dividend snowball effect or compounded interest, this is what they're talking about. So we have already purchased shares of EPD. EPD paid out dividends. Those dividends buy more shares. Those shares add additional income. That's the snowball, right? And the hill is time. The hill that snowball is rolling down, that's just time. So the longer you do that, the longer you do this, whether you're adding more shares or not, just the matter of time will continue to add, in this case, $150.87. Next time it'll be a little bit more, probably close to like 155. And then the next time it'll be a little bit more and a little bit more, and more shares will be added, and that snowball will continue to go as long as you keep it invested, right? That's the time. So you're the deciding factor on time. Whenever you want to enter or exit a position, that's your decision, but time will do the rest in dividend growth investing. That's the idea. Now, we weren't done. We had a lot of activity on the 15th. We received $381.03 total for the day on November 15th, and it started out Ally Financial paid us $71.68. Again, we have the drip set, went right back in and picked up 1.9851 more shares of Ally. Realty Income, the monthly paying REIT, ticker O, this is out of the healthcare or out of the real estate sector. Ally is out of the financial sector, and EPD is out of the energy sector, if I didn't mention that. So Realty Income, the monthly paying REIT here, paid us $68.42, went right back in and picked up 1.22115 more shares of Realty Income. Procter & Gamble, ticker PG, out of the not out of the healthcare sector. Procter & Gamble is out of the consumer staple sector. Ticker PG paid us $43.61, bought 0.26002 more shares of Procter & Gamble. And we weren't done. We received another REIT payment here from Omega Healthcare Investors, ticker OHI, paid us $197.32, and that picked up 4.93585 more shares. All total, the new shares added an additional $20.50 in passive income over the next calendar year. And finally, we get to the new capital invested. We dropped $816.92. Need to change that. We're out of October. We're into November. On November 12th, which was Tuesday, so we picked up 2 shares of Haverty Furniture Companies. This is down in the $22 range at the end of the week, so we may be nibbling on this one for a while. 2 more shares, ticker HVT, out of the consumer discretionary sector at $23.17 per share. 6 shares of our weekly buy here. Now, we didn't pick up shares of SCHD, so I doubled up this week. We picked up 6 more shares. We're going to be doing 3 a week. That's why you see the double up here. That accounts for what we didn't pick up last week. We picked up those 6 shares of ticker SCHD, Schwab's Dividend Growth ETF, at $29.18 per share. And same thing, VTI, the Vanguard Total Stock Market ETF here. We picked up 2 shares instead of our weekly 1 share to make up for missing last week. 2 shares of VTI at $297.75. I believe both of these are pulled back. This one might be back in the 28s, and I believe this one closed out the week at 292. Hopefully next week it stays down low and we can take advantage of that little dip. Now the new shares here added from this $816.92 added an additional $15.91 over the next calendar year. And we weren't done. We went back into the market on November 14th. We added an additional $1,155.47. And with those funds, we picked up 1 share of Valet, ticker VALE. This is out of the materials sector. Picked up that 1 share at $9.88. 6 more shares. This is what we're going to be focused on for the rest of the month here of November, maybe even further if they remain low. Lam Research Corporation, ticker LRCX, out of the information technology sector. Picked up those 6 shares at $74.57. And Google here, we're continuing to add to our Alphabet position, ticker GOOGL, also out of the information technology sector. Closed out the week, 4 shares there at $174.55, and I believe this closed out a little bit lower, down to 172. I'd love it to drop back into the 160s, 150s, or even lower. But total passive income added with the new shares, $9.88. Total invested for the week, $1,972.39 in total, adding $56.54 in passive income. Quick run through the sector weights here. Communications makes up 10.74% of the portfolio. Consumer discretionary at 4.74%. And if Haverty stays pulled back, we'll probably add there. And BABA, if it stays pulled back, we might add there as well. So might be adding a little bit to the consumer discretionary sector while there's a big pullback there. Consumer staples at 9.17%. Energies at 6.13% of the portfolio. Financials makes up 2.81%. Healthcare sits at 12.48. Industrials makes up 6.75% of the portfolio. Technology makes up 13.19, and it is now the largest slice of the pie, with healthcare taking up second place, followed by communications, 13.19% technology, and 8.80% materials here. Utilities makes up 8.61%, REITs and real estate at 8.61%, and ETFs starting to get a larger piece of the pie here in ETFs. Eventually, this will be the largest, but just by the nature of investing in VTI and SCHD every week, eventually this will overtake the portfolio, and that's okay. Over here to the right, you can see the same percentages that match up with the pie, as well as the dollar amount allocated to each sector as well. And here it is, and I do show this every week. I like to be transparent, open about what I'm buying, what I'm selling, what I'm doing in my portfolio, the options I'm in, everything that I'm doing. I try to be as transparent as possible. I believe it is good to show your portfolio. If you're on YouTube talking about investing, show people what you're doing, right? That way they can be the judge of how well or how good you're investing. You know, we don't give advice, but your investing strategy is, and then they can help comment and tell you what's going on. It also, in my opinion, helps some of those of you out there who are on the fence. Maybe you haven't started investing. Maybe you just got started and you're seeing some pullbacks in some positions and you're freaking out wanting to sell. I think it's important so that you can see there's red in my portfolio. That's okay. That doesn't mean I'm running out of these positions. If I think they're good companies and I've done my due diligence and I believe in them still, I should be wanting to buy them cheaper, right? So the red, you're going to have ups and downs in your portfolio. Warren Buffett famously said, if you can't handle a stock dropping by 50%, you shouldn't be buying individual stocks, or you shouldn't be in the stock market, right? Because the market can drop. Stocks go up, stocks go down. Each one of them has a 52-week high and a 52-week low for a reason, and they can retest or set a new 52-week low or a new 52-week high for any reason, with many reasons. Earnings reports, positive or negative news. I mean, if you're in oil and gas or utility stocks, something as simple as a major storm or a war breaking out, major incident like a war breaking out overseas could drastically affect stocks. So there are many reasons that stocks go up and down. You should understand that that is part of the market. Just make sure you are buying into good companies that you understand, that you've done the due diligence on, you've kind of found out the price you want to pay. And then if they drop, buy more of them. You don't walk into a store and run out because they have sales going on. Typically, you buy more of whatever you were going to buy and maybe buy other things because you just saved money. That's the way it goes. It's a market of stocks, right? Unless you're buying something like VTI, which is the total stock market. If you're buying individual stocks, there's always going to be pullbacks in different sectors, different stocks at different times. All right, enough about that. Here's the ticker of every position in the portfolio. How many shares I own as of the close of business. All these numbers will be as of the close of business on Friday. Current price, market value, average cost per share, that's my average cost, purchase price, and my average cost and the purchase price do include reinvested dividends. Total return, whether I'm up or down, you'll find it here. Obviously, if the red means I'm down. Percent up or down, same thing. Red means I'm down. Green, the darker green, mean I'm up. And all the green, light green included, means that the position is up. And red obviously means it's down. What sector they fall in, whether they're a quarterly, monthly, semi-annual pair, their current yield, my yield on cost, the portfolio weighting. So what we saw on the previous slide was each sector's weight. This is each individual position's weight. I also do have a bit of a hard and fast rule here. And sometimes I might break it. If a stock runs up, it doesn't mean I'm going to adjust the portfolio just for that reason. But I do want to try to keep in each individual position no more than 10 to 15% of the portfolio, 10% really, and each individual sector no more than 20 to 25% of the portfolio. Estimated annual income in this column, payout months here, dividend growth year over year here, and 15% of a 52-week low. Let's talk about this for a minute. BABA, for example, we just talked about that, right? It's dropped all the way. See, isn't that crazy? We ran a covered call for $107 and got $33. Well, it was in the 90s at the time. So it really dropped back down. And as you can see here, down to $88. Obviously, it's above my cost basis of $75.49. But where it sits at 15% of a 52-week low, at least the last time I did an update, it may be even higher than this right now. I need to go back and look at and do the math on some of these positions I haven't touched in a while. But $76.62 is above my average cost, right? So I could nibble on this a little bit. And so long as I keep it under this cost basis, no biggie. Even if I went over a little bit, no biggie. This just gives me a high water mark of where the price stands at 15% of a 52-week low. I'd like to keep my cost basis under this, but as you can see, Google over here, $160.76 is my cost basis. Well, $139.67 is where it sits at 15% of a 52-week low. So obviously, that rule can be bent or broken as I see fit based on the position. But it at least gives me something to look at. Where is it at 15% of a 52-week low? And maybe you like 10%, maybe you like 20%. You pick the numbers you want. Don't blindly copy what I'm doing or anyone else does on YouTube. I'm just showing you my journey. So again, maybe this will help you. Maybe you'll see what mistakes I make and don't make them. Maybe it will give you the confidence that, hey, you can do this too. I'm just a regular person. I go to work every day. Married, have 2 kids. I do not have a financial background. I'm not a financial guru. I did not go to college for this. I'm learning as I go. And just like you, I watch a lot of YouTube videos and I read a lot of books. And I would recommend that you do the same and pick an investing style for you. Maybe you're not a dividend growth investor. Maybe you're, a growth investor who just does high-flying tech or high-flying big companies that are growing really fast, like the Palantirs, the Teslas out there, something like that. Nothing wrong with that. I prefer dividend growth investing, and I think you can get a mix of some companies that are the both the best worlds, like Google or Microsoft. But anyways, total shares sitting at 6,221.194 shares. Market value of the portfolio, $310,391.71. My purchase price, what I have into the portfolio, $287,418.40, does include reinvested dividends. Total return, $22,973.32. And I don't focus on this. You've seen if you've been watching me for a while, the last few years I've been on YouTube, you've seen my portfolio down, you've seen my portfolio up higher than this. I say the same thing. Up 7.99%, not what I focus on. Current yield of the portfolio, 3.903. My yield on cost, 4.215. And the reason it is circled over here in red, this is what I focus on. The dividend total paid out estimated over the next calendar year, where it's set currently from all the different positions in the portfolio, $12,115.78. And this continues to grow as the market goes up, or the market goes down. It doesn't matter. As I add new capital, as the positions in the portfolio pay out dividends, this continues to go up, typically week over week, month over month, quarter over quarter, year over year. Now, there have been times where this has dropped back down. If I sold out of a position to roll into another one, perhaps that has happened. But for the most part, week over week, month over month, quarter over quarter, year over year, this continues to grow, and again sits at $12,115.78. And every week now it's hitting a new all-time high. Really nice to see. And the average dividend growth currently of the portfolio at 6.24% year over year. Well, that is really it for this one. Let me know what you think of the portfolio update. What did you buy? What did you add to your portfolio this week? Maybe you're one of the people that was taking some profit. Big drop this week, later in the week, after the Fed kind of announced they're not close to doing any more rate cuts, or there's no real reason to. And I agree. If the market is sound and we don't need to juice the market for any reason, there's no reason to cut rates. This is close to historic norm anyway. I know we've had historically low rates for so long that people think that low rates are the norm, but that's not the case. 4 to 5% is typically normal for the federal rates fund. So in my mind, we're right where we need to be, and let the economy do what it's going to do. We'll see what they do here in the future, but I don't see a need for rates cuts, and I know that spooked the market, but I'm going to take it as a buying opportunity. Look at the stocks that I want to buy that are cheaper right now, and go ahead and do that. Hopefully you're doing the same. Again, let me know what you're looking to buy in the comment section down below. With the pullbacks this past week, what are you focused on? Love to hear from you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.